Good morning, everyone, and welcome to the Morning Edge webinar. I am using the new mic setup, so it's just taking a couple minutes to set those settings up. Let me just move this out of the way. And hopefully the audio sounds a lot better. I'm using the Yeti mic. Okay, let's... The big mover obviously was on the, well, we did get the big move out of the euro. We got the big move out of the cable. Certainly have seen the Aussie going and respond in kind. The dollar index did make it down to our bias chart support. I thought they were going to make that during the U.S. session, but they did go in and make it down there. Pull this over here. Yeah, 94.36 was our bias chart support here on the cash dollar index, and that's exactly where it went to the tick. Right there to the tick. Although I thought it was going to make it in the U.S. session yesterday. The euro made it right to our 1698 that we had, and I think we just ticked 17 and pulled back. But we have made it up here, buried up a little bit here in the euro, but certainly we got a favorable response. I was talking with Blake yesterday, and I mentioned to y'all too, I don't care what the year could be in the worst downturn cycle, and the news can be as bearish. And I tell you what, it always rallies after the ECB. Always. I mean, let's say at least 9 times out of 10. And then sure enough, that's exactly what happened. No matter what Draghi says, and Draghi does try and talk down the euro, it always comes up. It's like Blake used to say, it's like that beach ball in the water. You just can't hold it down. Every ECB meeting, it always rallies. It's just the way it is. And so they're playing the percentages. I was hoping for a little bit lower dip in here. We didn't. We just barely pulled back. And once again, obviously, it did go in and pop back up. Ran out of gas right in the area that we were looking at, which was the 1698, but didn't run out of gas very much. But I was looking for the dollar index to get to 36, which it did in the European session this morning. But I thought it would get to 94.36 in the U.S. session. I think the low was 94.42 at the time. One big mover was obviously the gold market too. That took off. But I tell you what, we did. That's another thing here is on the gold market, we're looking for a bigger move overall. But you can see here where the gold ran out of gas. 1219 was our bias chart resistance, okay? And the high on gold was 1218 and change. Well, yeah, 1218. So we're up by $1 on our bias chart resistance, which was on gold, which is 1219. We are still overall looking for a bigger move in the gold market, but yeah, that was our bias chart resistance at 1219. Where gold, gold struggled at that same 1219 area before. If you've been following the analysis, this is some time ago, I guess about a month ago or whatever. Maybe I don't know exactly what. There was our level. Remember the 1219? Remember that was our bias chart resistance back then on August the 12th. Well, this is when it hit August 12th, but it was right here on August 26th. And sure enough, that's exactly what ran out of gas. It actually, I think it ticked up as high as what, 1220? And then we're looking for a rotation down to 1208. I thought it would take about a couple of days, maybe 2.5 days. Well, once it hit that 1219, it rotated down to 1208, all within the same session. Then it actually held up pretty well. I thought it was going to drop further. But like I said, we popped back up. But yeah, looking on the profile chart, you can see the point of control here and volume point of control. And that's why I thought that 1219 was going to be a big area, was going to be a very good area, which was what, about 2 weeks ago. And it provided, ended up being quite formidable yesterday too, although the high was 1218. That'd be just a sec. So we'll go and take a quick look at the news, and then we'll jump into the analysis. Everything's trading fairly quiet, although up at these upper ranges for the euro. We did talk about the cash dollar index, the analysis we were looking at yesterday. I was talking about this being broken down, and we're looking overall. We'll see what happens, but I'm looking for a move down to 92.80. I think it was, 92.80 with a pause at 93.72. But you can see how we've broken out of this trend line here. And we gave the, I don't know if we call it the, not fundamentals, but the tone or whatever, is that, the administration reaching out to China. Now they're denying it, but it's a perceived sign of weakness. And that's how the market's going to go and view it. That's, that has been the oxygen for the dollar index to try and keep holding at these highs. Now with the U.S., all this tough talk, and then all of a sudden they say, we're going to reach out to China and try and, initiate some talks again. Perceived sign of weakness. Whether you agree or not, that's just how the market's going to read it. And we've turned around and rolled over here. Not a whole lot, but once again, we can start to garner some momentum and move lower here. Dollar's still in good shape from an overall perspective. Look at that. But correction, yeah, sure. Certainly warranted. I just don't see what kind of headline they'd be able to come up with now that could push the dollar index back up. So obviously that allowed for the euro to move higher, allowed for gold, although gold quickly gave up those gains. And it ended up holding here at this. Remember, that was our key area from before, the 1207 being a daily breakout area. And that's actually where it held down there and then popped up and then kind of came down here and tested a little bit lower before moving back up a bit. But I think right now, yesterday's price action was really disappointing for bulls. So be quite interesting the way gold's going to try and play itself out. Anyway, let's go on and move in and just do a quick overview with the news. Canadian dollar strengthens on the NAFTA trade deal. Optimism, boy, this dollar CAD has, done nothing but gone south of the border big time. Nary even a bounce. But states here the Canadian dollar edged higher against its U.S. counterparts on Tuesday. Well, this is actually saying, so this was a little bit older here. I'm not sure what happened with that headline. So it's continued to stay stronger. So we'll just move on to the Aussie dollar. The Australian dollar nears its best week in 5 months as bears retreat. The Aussie dollar was heading for its best week in 5 months on Friday. A safe haven flight from emerging markets calmed a little, and a run of solid domestic data caught bears in a short squeeze. The move, it got a lift overnight when Turkey's central bank hiked rates by a surprisingly aggressive 625 basis points to 24%, boosting the badly beaten lira. The move eased concerns about emerging markets and prompted some short covering in the Aussie, which had been sold as a hedge against such risk. The reversal was the sharpest against the safe haven yen, with the Aussie currently up 2% for the week at 80.52. Also helped was Thursday's strong August jobs data report, which was underlying the resilience of the Australian economy and nudged bond yields higher. We talked yesterday about how there's been this rotation into Aussie assets because it's gotten the stuffing knocked out of it. And we've got the RBA. I mean, the idea that one thing about the Australian economy, not only is it resilient, but also good fiscal restraint. Let me put it that way. Sean Callow, a senior currency analyst at Westpac, noted some of Australia's major commodity exports had been faring well, even in the face of the Sino-U.S. trade dispute. We talked about how mining stocks are at near record levels. Australians' commodity prices have been trending higher, even as the Aussie has been falling. There's a scope for a push to 72.50, 73 over the next week if risk appetite holds up. That may be the case because, like I said, now we're seeing the U.S. administration cave in a bit. Now they're the ones reaching out to China after a lot of talk, literally just days before when they're talking about slapping another $276 billion, and now they're reaching out to play nice. Now let's go and move into the sterling. Sterling for the second biggest weekly rise in 2018. Sterling rose on Friday and set for its second biggest weekly rise in 2018 as an imminent concerns over the outlook of emerging markets faded after Turkey's sharp rate hike. One of the things we talked about was the close, a daily close above 30.56, and certainly we got it. There's that pivot that we've repeatedly talked about here. We went into details yesterday regarding that 30.56. And so overall, I'm looking for a move up here to 133. 33.17 is a 38%. We're looking for a pause at 31.70, but certainly it looks like it's going to be up and away as it continues to respond positively, even when we get negative headlines. Yeah, that takes a dip, but it turns around and pops right back up. You've been seeing that here, 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 here. Every time it gets knocked back, it just comes right back up and pops back up. It's been a good week for high beta currencies, including the pound, thanks to Turkey and growth upgrades by the Bank of England, but it's still too soon to flip to net long, said Kenneth Brew, currency strategist at Societe Generale in London. Mentions the fortunes were mixed against the euro as the lower than forecasted U.S. inflation data pushed the single currency higher. Weaker U.S. inflation data continued to hurt the dollar. The U.S. Consumer Price Index, the government's broadest inflation gauge, rose 0.2 in August and less than 0.3% projected by analysts in Reuters. Euro hits a 2-week high as hopes rise for U.S.-China trade talks. The euro rose about 1.17 to a 2-week high on Friday after weaker than expected U.S. inflation data. We already mentioned about the Turkish central bank, and a new round of talks to reduce tensions between the United States and China buoyed broader market sentiment further on Friday. As I said, the administration is now denying that they reached out to China. Look, the market knows what's up, and that's what I'm saying. It's saying right here, you can deny all you want, but a new round of talks is starting, okay? That's why the dollar's lower. The bigger move is in the U.S. dollar and its continuation of yesterday after weaker U.S. inflation data, said Esther Reichelt of Commerzbank. The European Central Bank kept policy unchanged and is expected on Thursday, staying on track to end its bond purchases this year and raise interest rates in the next autumn. And we already mentioned about the emerging currencies like the South African rand and Mexican peso held on to the gains after a big rise after investors welcomed Turkey's central bank move to hike policy rate to 24% to restore confidence in the lira. And mentions also about the Aussie dollar. So let's go on and move on here. And we're just moving quickly. Eurozone bond yields creep up and bond yields hover near 6-week highs. Boy, you can see here, this bond has really moved back to the low end. Obviously, right here, lower prices, higher translates to higher yields. Borrowing costs for the euro area crawled higher on Friday, with German bond yields hovering near 6-week highs after the ECB confirmed its monthly asset purchases will be halved come October. Demand for safe haven bonds as Germany was also dented by hopes for a new round of trade talks between the U.S. and China. The ECB lowered its growth projections by 0.1% for the next 2 years. The ECB staff forecast showed only trimming of growth expectations. Our interpretation of the forecast is that they will tell a story of the euro economy, which is still growing comfortably, and where headline inflation is likely to remain close enough to target for the central bank to keep hiking rates into September 2019, or to be hiking rates then. Okay, and also indicates with Italian yields, were blended to move in the opposite direction to those of the higher-rated bond markets, especially in recent weeks where worries about the government spending plans have weighed on the Italian bond market. Risk factors that have been worrying us have become less worrying in the last 24 hours. And lastly, let's take a look here with the gold market. That was a bit of a surprise when we got this move higher, but then we quickly gave up those gains, and I think it really left bulls disappointed. Gold rose on Friday as the dollar faltered after the softer than expected U.S. inflation data. With the data falling short of expectations, investors are thinking that the Fed may not go for a rate hike in December, even though the hike in September is definite, said Xi Ming. The dollar index fell against the basket of major currencies and was a shade lower at 94.42 or 94.44. Trade negotiations is a favor to the gold market, with the dollar a little bit soft and some shorts being covered. There's also some physical buying in Shanghai. Gold prices have declined about 12% from a peak in April amid intensifying global trade tensions and under pressure from rising U.S. rates. Holders of Spider Gold, the largest ETF, were down 0.4 on Thursday and 4.1 million ounces from an April peak. Yeah, I mean, the Spider Gold, I mean, it still continues to be going lower and lower. You have to wonder, I mean, even on the way down, it was still going lower. on the rallies back, it still goes lower. We're still pushing lower. Interesting, very interesting, actually. If prices stay around $1,200 levels, it means the markets are still positive. People who shorted below could come and cover, driving prices to $1,250, said Hidetake Namiki, chief executive at Singapore-based asset firm Bullionist. So let's go and move this out of the way. And let's get going with the euro. So we had 1698. This is right where they ran out of gas, or they went into resistance. I think they got right to 1700. Then they dropped down to, I think, really not a whole lot. I think they dropped down about 20 pips and stood there. And we finally came back. Well, maybe they dropped a little bit further. They actually did. They dropped. So I guess they dropped about, almost 30 pips from that area. There's our resistance, 1698. So they just barely poked their head above it. And we came back and stayed there, and we started working higher. This high here, 17 looks like 22, coincided with the cash dollar index support. There was our bias chart resistance or bias chart support for yesterday for the cash dollar index over the next 24 hours was 94.36, although I thought we would get to 94.36 in the U.S. session yesterday. You can see here we got exactly to 94.36 right there. It looks like it's 94.35 and a half, so off by half a tick. So let's go and look at where we are for the euro. Certainly we have gone and moved higher. And if the dollar, we're looking for a move eventually up here to this 38%. If we start to, we're going into, we're already in Friday, but I'm saying is we could see further selling of the cash dollar. When I say further selling, I mean as far as bulls who turn around and say, you know what, okay, I'm getting out. So we could still see a further uptick here in the euro. My concern is as we go into the end of the week, if the dollar starts to roll, it'll keep on rolling, and we'd obviously see this euro move higher. Some good resistance here, and we didn't even make it up to there. So well, I'll tell you what, we'll put it right here, 1743. But this is actually the target up here. So that'll be our resistance for today, 1743. It's still going to stay in a range. Yeah, we've had a breakout. We're looking for a breakout. But when you put it in the bigger scheme of things, folks, that's still a range. And what we look at the 3 to 5 days. But, I mean, as far as our bias, as far as the same with the bias, whether it's bullish or bearish. But look, we're just in the upper portion of this range. So nothing's changed. So it's still a range. It's gone, it's been reacting bullishly, and it's broken out of this little pattern, but it's still in a range overall. Let's not get overexcited. I think we're still going higher, but the bias is still in range. Now let's take a look as far as support. Here's the breakout area. Oh no, it says 68. We're going, it should be 58. Yeah, we'll go with that. 1658, the top of this zone here we have. That's why I like to color in these zones, because you can see where the breakout area is, or where the fall. You can see how they rotate back and forth, and where you look for the. You see how they came back for support into this zone, and once they got below it, we just start shedding lower. And where do we rally back? Right to the top of the zone. This makes it easier, visually speaking, for you to see where things are at. I mean, at least for me, why I like to color in these zones. If I can find a zone where I think that the market is respecting, yeah, I would look for this for support. If we were to start to slide back, 1658 is support. Let's go and move into cable. So we did get that daily closing cable above 30.56. We've talked about the importance of this pivot. That's why we have that marked off in crimson. And we're looking for a move up to 133. Actually, we can make it up here to this little zone here. You can see that 33.47. That's going to coincide or confluence with 33.17, which is the 38% of this entire move. And I'll show you, for those that are not, don't use Fibonacci very often. You see right there. There you go. There's a 38% of this entire move. And this upside, hold on. It might be a little bit higher or lower. I might have hit the mark. Come out. Oh, I moved it and kind of threw it off. So you can see that coming in right there. So it's going to be 33.17 here on the 38%. Retracement back. Well, it's a natural area for the market to rotate to. And certainly now that we've got that daily close above 30.56, the market's going to have that momentum. Anybody short is going to be looking to buy back on any kind of dips. And the same thing, anybody who wants to get long, once again, is going to try and buy back on any pullbacks. So resistance today, well, this was our, remember we talked, there's that 31.68. And when I did on the analysis, we said, hey, we're looking for this market to move higher, especially if it gets a daily close above 30.56. And with an initial pause at 31.70. So that's exactly what we're looking for. So that's going to be our resistance, 31.70 for today. And now we got that daily close, we will change this to bullish. Support now on the cable for the pullbacks. Let's take a look. Obviously, 30.56 is huge. We're going to go right there. You see that? 30.36. 30.36. Actually, we can move this right. You see right there? Coming across all that good support. We're going to call it 30.30. 30.30. So if we get some kind of crazy headline come out, it'd be 30.30 for support. It's still a ways that really you'd be looking at the 30.56 is huge. And so if we go and shoot past that a little bit, I think any moves down here at that 30.30 is where you'd want to go and step in and start to go in, or where I would think that the market would step in and want to support that gladly, as things are starting to turn the way of the cable. Now let's move into the Aussie. Certainly this has come up, and that's our resistance from yesterday, because we said, hey, you know what, and always look at these resistance areas here, this, and look, hey, look, this market is so oversold, it's so beat up that you can get a swath of short covering that'll really push this market back up. So that's where we went, just with the straight up technicals, and we're going to stay with that. 72.55 for the resistance. Support, market up holding up rather well. Support's going to be right there. Right there. You see that? That's going to be 71.66. Maybe we could push a little bit lower. That's not much. We'll go with 71.65. 71.65. Just move that up just a bit. Oh, Rio says hi. He also says, take a look at the, he says the U.S. 30-year cash. Okay, Rio. I actually look at the 30-year futures, and he says, what do you think about the longer term for the New Zealand dollar and Swiss franc? That would be one question for Stelios and Steve, who look at those cross rates. Me, as you can see, I only focus on the majors and also gold, bonds, and bunds. I do have the DAX here, but I don't really trade the indexes very much anymore. I just, like I said, this keeps my, I think if you want to trade the indexes, at least for me, I think I just have to almost exclusively focus on the indexes. And unless I'm holding for much longer periods of time, and that's not my style. So you have to be looking at also the cash market and a lot of things just a lot of stuff. And so for the most part, I just focus just on the majors, bunds, and gold. Let's go on. But like I said, that would be a question you can give to Stelios and Steve. Let's go on and take a look now with the but thank you very much for the comments and the question. Let's go on and take a look now with the Kiwi. Well, finally we're starting to move a little bit higher. Remember, yesterday was like, it wasn't even much of a move compared to what the Aussie had done. But you can see they came right into our resistance here. They're just a little bit lower than our resistance. Our resistance on the Kiwi was, well, actually 66.07. So here's our resistance. Right there. So we did move it up here. So it hasn't quite hit the resistance here. We're going to go and keep that. We're going to stay with that. 66.07, which is right there. We're going to go and keep that there. Support. You can see here 66. We had 65.25. We may have to go in and move that up now. Here's where we had 66.25. We're going to move it right here. You see here, that plays in really well. You see market finds resistance, and now that support, that's going to be 65.42-ish. Yeah, 65.43. That'll be our support, 65.43 on the Kiwi. Still, once again, I don't really see anything other than it's just oversold. Let's move into the dollar CAD. We have really worked lower in this thing. A couple of days ago, going very late into U.S. trading, boy, did this thing come apart. And remember, we got a little bit of a bounce, and we just turned around and rotated. I thought we probably, I was telling you all the story. I was talking to the one guy in the chat room. This is in the Asian session, and he was up 30 pips. And, he was wondering, hey, if he should go and hang on. And I was telling him, well, after a fall like that, it's going to be under pressure for the next few days. But honestly, I didn't see this move. I thought, let's take a look. After this big move, I thought we'd probably go to here. Then we'd probably move here. Then here. And then maybe we can go up to here, and then you get an opportunity to sell it. I didn't think we could. I mean, I thought we'd be under pressure, meaning we'll test this area. Maybe we could even push a little bit below 30.40. I didn't think we're going to just drop another leg here. So let's go and move this. So I still like this area support, this 29.73. Let's see if we had actually moved it down to 29.51 in case we got a little bit of an overshoot. That's right. And boy, that is a bit of an overshoot at this point. But once again, I tell you what, we're going to keep the 29.51, and I'll tell you why. Is because my concern is if we see further liquidation of the cash dollar index. Anybody that's long now, let's say they're long from here and here and here, has to be saying, wow, this doesn't look good. You know, why don't I just go on and get out of my longs? I'll start over next week. So we could see continued pressure. That's why now, instead of maybe saying, okay, right here, to be on the safe side, I think it is, we're going to keep that support at 29.51. Resistance, right there, 30.45. You can see this coming right across. You see this little level coming right across? 30.45 is resistance, which would be just about tagging that trend line. So it's going to be 30.45. Anybody who's long on any rallies back, they're trying to get the heck out of this thing. In the bigger scope of things, yeah, that market's still bullish. In the bigger scope. Let's take a look at this. Yeah, right there. Maybe that's what's holding it. But like I said, try and look for any type of confluence we can get, but it's certainly weaker. And if the dollar does, we see further liquidation, we can really come back in quite a bit. I'm not worried about any fib right now here because I think, you can find 61, maybe 78. Look, if we start to see this dollar liquidation, the pressure is just going to remain. And this dollar cat just can't seem to get any kind of lift here. I mean, they've got the bulls on the defensive. There's no reason to let them out of jail. So pressure will remain there. I think Joe might still be short. She's been trading this thing like nobody's business. But anyway, let's go on and move in now to the dollar Swissy. This is a good indicator at this point. I've noticed here, and we talked about this yesterday, the dollar Swiss, we saw that yesterday weaker. And we talked about how it got below the 97.09, and this looked like it's still moved lower. Well, I'm probably not saying a whole lot because we were thinking the dollar was going to move lower anyway. But it remains very weak, which may foretell, further liquidation here on the dollar. Certainly, let's put it this way. Certainly, we're not seeing any type of divergence. Now, the support we're seeing here looks like 96.23. Let's see if we can see something a little bit definitive here. Right there. 96.16. That's a heck of a way lower, but that's where it's looking at. 96.16. We'll also see if we can see anything as far as a fib here. Hmm. 96.26 is a 50%. So that makes sense. And I do like the 96.16. So we got 96.26 as a 50%. So let's go with 96.16 for a little bit of an overshoot. We seem to have a little bit of touches right there in that area too. There's our 96.23. There's our 96.16. You see right there? So a little bit of support. You see right there, this close right here. And also the low on this little doji here. That 96.16 looks like a good area. It's actually 96.17, 96.16, where they could, 96.26 is a 50%. You got a level there at 96.23 and a little bit of an overshoot to 96.16. So that's a good downside target. And certainly the pressure is there. That's on the daily. Let's go now to the back to the 2 hour. We can find some upside resistance. That's what it would be. Wow, this thing is really taking a tumble. 96.78 would be upside resistance. Certainly bearish. There's no doubt about that. Let's go and take a look here with the dollar yen. Well, we just about made it here to that 12.11. I think I was telling Amir yesterday 12.16, but it's 12.11, 12.16. I said, okay, well, 12.11. Look, we got past this bias pivot. But we were talking in the chat room, and he was saying, what do you see? I said 12.16. Well, I printed up the chart, and there it is, 12.11. We made it. I thought we'd even make it a little bit higher. We did make it up here to 12.08. I think Amir was looking for 12.20. That's the resistance there, 12.11. Let's take a look here. I don't want to say bullish. I don't want to switch this back to bullish until we get 2 consecutive days above 1166. 2 consecutive days above that key pivot. And it is a very key pivot. It's going in. Well, actually, let's go to the daily. That should tell us enough there. See how big 1166 is? If that isn't a pivot, I don't know what is. Yeah, I want to see 2 consecutive days, 2 consecutive daily closes above 1166 before I want to flip this and say, okay, now it's bullish. You can see the 12.11 coming across here. And they stopped at 12.08. Other than technicals, I don't know what. Well, I was going to say other than technicals. Well, obviously, there's a good reason why it's up here because U.S. rates continue to be moving higher. Look at that. And generally, although the relationship had broken off for a while, let's take a look at this. The dollar yen generally trades inversely to the 30-year bond or 10-year note, whichever one you want to look at. But so if rates are if bond futures are going lower, meaning rates are going higher, so bond futures prices going lower, then generally that means here we're going higher. Although when you look at where bond futures have been, look at this. Falling into the basement. You certainly would have expected the dollar yen to be much higher, especially how strong the dollar's been overall. That's why it makes me question this whole move up in here. But technically speaking, it is where it is. I mean, it's above that bias pivot, but that's going to be a resistance. Support, well, obviously a move back to the bias pivot and maybe a little bit of an overshoot. So support would be right there, 1158. That's your first area of support, 1158. It's going to be interesting to see how the dollar yen can hold up here if the dollar starts to lose its steam, and we see further dollar liquidation. Speaking of the aforementioned dollar, let's go and move into there. So we were looking for a breakdown here in the dollar, and really just I want to say a mix. I mean, we're looking at the technicals, good reason, but also we've been saying, and I thought we, once again, I'll say this, earlier in the week, I thought we were just one headline away from blowing some stops here, and then the market could start to ease back again. But as I mentioned, the news with the dollar took a dip a couple of days ago, a couple of mornings ago, not yesterday, but the day before, on the news that the administration was reaching out to China to restart talks. Now, they've denied that, but now the market doesn't believe that. And once again, not speaking politically, I'm just saying that's a perceived sign of weakness, because all this has been, most of this has been a result of all this tough talk about all these tariffs and business. So with the administration reaching out, it looked like, okay, well, there goes the bid for the dollar, which was really having a tough time trying to move to new highs when you think of where the economy is, the Fed raising rates, and then all this tariff talk. You thought, as I said, I would have thought the dollar index would have been much higher. So it's been struggling, and it's been using these headlines as oxygen just to go and keep up here, like basically treading water. And then all of a sudden that headline comes out, Steve Mnuchin reaching out to China to restart talks, and it just pulled the person under the water. And that's where we are now. So as we go into a Friday, last Friday we got this up pop here. That was the headline where the administration of Trump says, I'll slap another $276 billion on China. So that was where the dollar index was, even after the non-farm payroll report had a bit of a bid, but we weren't doing anything yet. We were right in here. And then all of a sudden that news, and we finished the day strong on that news, and we just slid right back. So now essentially you can think of the news as being refuted, not only refuted, but going in the other direction. And we've seen this. And so now when you think of where the dollar index is now, you're probably thinking, well, we could easily see further liquidation of longs. Hence, I'm thinking we're going to drop back. Well, but based on this move, all I was thinking is that overall, unless we get a 2-hour close above 95.32, potentially we're looking for a move down, or at least I am, down to 92.80 with a pause at 93.72. But like I said, we're in the infancy of this move, if it's going to go on and play out. So we could easily see further liquidation going into the close. But selling up against the break of this. So where's support now? We had support at 94.36 from yesterday going into today. We did get to 36, but I thought we were going to get to 36 in the U.S. session. I did hold the 36 from this morning's European session. Where's support now? Well, my concern is if we start to rotate lower, we'll break this, and there's no reason for anyone to step in the way of this on a Friday. So we're actually going to move the support down here. Just a little. Well, actually, going to just move it right on down to 94.09 in case things really start to slide out. So I'm actually going to go on and stretch this. This is actually going to last all the way into Monday, because in case we do see some dollar liquidation, I definitely wouldn't get in the way of that. And resistance, that's that same area we talked about yesterday, which is going to be, well, where we were seeing an optimal area for you to initiate, or for not you, but for the market. Technically speaking, because I'm not offering any buys or sells, technically speaking, I said this was a more optimal area to go and sell any moves to 95.07/08 with a stop at 95.32 on a 2-hour close. Well, there's our 2-hour close, but we've moved lower, so it's going to be 95.07. But I think it's baked in the cake, at least technically speaking, what this market wants to do. At this point, if you lowered it here, it really be moves just to any moves to 95.02. Actually, we're going to go with that, 95.02. Still looking for an overall bigger move lower. Just on a correction, that's all. And I kept this as a range because the reason is we've just been going up and down, up and down, up and down, up. We get a breakup now. Oh, here we are back up and down, and now we're starting to move towards this lower end. So there's that 94.09. You can see that here. We're looking at it on the 2-hour chart. I like the 2-hour chart. The reason I like the 2-hour chart is because instead of, if you're looking at a 4-hour chart, nothing wrong with that. Most people do. You get 6 bars throughout the day's session. Well, if you're looking at a 2-hour chart, you get 12 bars. So you can see things start to possibly, the market's tipping its hand. At least that's the way that I would look at it. That being said, let's go on and move in now. So we've got the dollar index out of the way. Let's take a look at here on a daily too. Okay, so the key level on the day is going to be this 93.89. Certainly some people are going to look at this as the potentially as a head and shoulders. And then your neckline would be basically 94. Some people might stretch it there, but the neckline 94, 93. So that would pretend to move if they would break that really down to 91. If that's what you'd be looking at. But what I'm looking for is a move to 92.80 with a pause at 93.73. We'll see what happens. Now let's go and move into the gold market. Now we're looking overall, we're looking for a move eventually up here to 1245. But this had to be disappointing yesterday. Now we did close above this key area, and we talked about this. This was the day before. Remember, that was our bias chart resistance on our daily close. Look at that. 1207. 1207. That was a resistance on a daily close. We mentioned that was a key number, and we closed above it the day before. So the market was open to move higher, and higher it did move, okay? And we actually ran out of gas. If you look here, here's our resistance from yesterday, 1219. And where I got that 1219 from for, and those have been following the analysis with me for a while, you know that 2 weeks ago we were talking about this 1219 being huge because we looked at the market profile. And at the time, we kept kind of bumping up there. We were coming a little bit short. So I remember for 2 days, might have been 3, but I think for sure it was 2 days, we had the resistance 1219. And on this day, they poked their heads up in the European section, I think it was. They got up as high as 1220 and change. And I was looking for a rotation down to 1208, and I thought that would take place over the next 48 hours, maybe a little bit beyond that. I'll be doggone if it didn't get down to 1208 within the same session. So that's why I had that 1219. That's also obviously, and I was looking right here at the point of control. That's also the volume point of control. There was just a lot of good stuff right in that area here. And just a moment. And there was some decent volume in here too. So what do we do now? And this is volume on a weekly level. So you can see a ton of trading going on at 1212. And obviously down here, we're kind of stuck a little bit in no man's land. One of the things that we did yesterday, I was in the chat room. We talked about, or I mentioned, well, obviously the breakout from the daily level, which is 1207, was going to be support. And I had a bid just below that, and I got filled. It rallied up. I actually probably spun out of that a little bit too quickly, but it popped up for a quick couple of dollars, and then actually moved up another $1.50 or something like that. But anyway, the key is that this resistance before then became support. Now they did eventually move a little bit lower, but I'm saying that was after the move. I think we made it up to like 1210 from after it dipped down to 1206 and change, and then eventually it rotated lower. That being said, that was going to be the support. So where do we stand now? To me, I think bulls have to be disappointed. I mean, it had an opportunity to really break higher. And gold, we talked about gold's kind of been not leading, but it's been mildly diverging positively from the dollar. When the dollar would fall, gold would pull back, but it was restrained moves on the way back. So you thought, okay, well, gold's ready to launch. And it started taking off. It wasn't playing around. And then for whatever reason, we really lost the bid. And so this has got to be disappointing here. But it's important that they hold in this area above 1207 for right now. So we'll see what happens. So let's take a look at it on a closer basis. So here's what I like. It's still going to stay the same. Support's going to be 1204. Any moves to 1204, I like the move if we can get a move down here. This 1204. You see here? And but I tell you what, bulls have got to be very, very disappointed with how this played out. I still think I like moves down to 1204, and it's important that they hold 1207 on the daily close. So if we dip down to 1204, but we end up closing at 1205 or 1206, that's not good because, as I pointed out to you, this is where the market was able to finally break out. Right there, 1207 on the daily close. So if we get a daily close below 1207, that means they have to go further down here to do some repair work and get some more buying. That would be it from a percentage standpoint. So let's see what happens. I still like buying it then at 1204. And overall, only a 2-hour close below 1197. Now, that being said, we've already spun higher. From a longer term basis, yes, 1204, 2-hour close below 1197 for me is a stop. But it's going to be key if we get that daily close below 1207. That means we have to do further repair work down here, and we'll have to get some more new buy-in here. So watch that daily close at 1207. So here's what I'm going to put here. Also, let's take a look on the profile. Yeah, really, there's a lot of volume. Look at all this right here, here to here. So this is where they're going to go to. If we have to end up going closing below 1207, they're going to 1201. This is where the volume is. You see a lot here. Well, a lot where the market spent a lot of time trading. The volume comes in right there, just below 1201. We'll see, but I don't see how it makes it down there if the dollar's going to stay weaker. I still like right here. You see here? The volume here and the point of control right there, 1206. That's what I'm thinking. If you get any dips down to 1204, I think that's a very good opportunity for a low overall longer term basis. So I like the 1204, but here's what we're going to mark on here. Important that they hold daily close at 1207. That's important. Or you got for the work on the downside. I don't think it's going to be a whole lot of work, but they're going to have to come back and do some repair. On the upside, I think we're almost out of time. Yeah, we got a little bit of time. On the upside, you can see it right there. See this close right there? So it's going to be 1213. 1213 on the upside. That's where the market will probably try and go back to again if we can get this dollar, in which the dollar is not. The dollar's finding some support here. You see that? But I like selling the dollar and he rallies back towards this area here. We already mentioned 95.02. I guess, you know, with the dollar, you haven't gone wrong buying it on a Friday because what's traders go by patterns. So, you know, as I said, I thought we were one headline or really a tweet away from a new high. Well, what happens in the morning? We know we get some tweets. So yeah, we'll probably maybe a couple more acrimonious tweets, which might provide an underlying undertone bid for the market. Certainly we saw that Friday. Look at that, you know. And so traders are probably playing the percentages thinking we may get just that. If we don't get that, then my guess is we'll probably start to rotate even lower. So maybe about mid-U.S. session, if we haven't received any tweets to push this market higher, and I'm not saying that facetiously, I'm being serious, then you'll probably start to see the market weaken back. So 1213 would be an interesting area here. But I still think this market has a nice bullish setup on the gold. So let's go move into the bonds. Holy smokes, this thing just remains weak. We had 41.27 on our support. You see here, it's still the same. They're probably going to try and test this, which really, look, there's support right here, which is 41.20, and to here, 41.18. I'm going to go with 41.18. Here's the reason why. It's a Friday. The trend still remains down. They're going to try and push the stops. How much of a follow through below here, I really don't know, but I'll go 41.18 for support because it's a Friday and they're going to try and push it for what it's worth. Makes sense. Resistance is going to be right there. 42.26. And I'm trying to scoot because we were right out of time. Well, same resistance, 42.26. Buns, well, these things have just been weak as all get out. Resistance now. This is really an important area here. This 59.20-ish area here. Let's get rid of this. You see right there, that 59.20? There's some good support there. Could we push a little bit lower? Right. Okay, look, you see this? All those touches come across. That's 59.14. Actually, it looks like we've almost made it to 59.14. I think from a long-term area, that's a very good area here. Pretty well beat up in the market. So we're going to go 59.14. right there. There's your resistance. See right here? It's 59.29. Can we see the market come back? Yeah, maybe. This is bigger resistance, but I don't want to give that much room, which would be 59.38. That was actually a good reactionary point the other day. I picked them up at, we had support at 59, I think it's 28, and then they went to as low as 59.25, and then I picked them up, but I jumped out after like 5 ticks, and they jumped up to 38, rotated low, and then went higher. So we'll go with 59.38, but on a very short-term scalp basis, it's going to be 29. So if we can see a recovery at the end of the day, look for 59.38. And lastly, with the DAX, here's that key area, and I think we kept that, which is 12.105. And we're going to stay with that. 12.105, that's where they're very key technical level here. We can pull this back. You can see that. Support right there, 12,037. Now we actually had 12,030. So just move that up 7 ticks.
How you doing, Paul Franco?
Hey, Blake, how you doing?
Good. Just trying to enjoy my Friday.
Yeah, it's nice that it's Friday. We're seeing a little bit of a bid for the dollar. And I was telling people, we're seeing the dollar come up a little bit. We had a support from yesterday at 94.36, and that's where they went to. But I thought they were going to do it in the U.S. session, and they waited till the European session because I wanted to sell the euro yesterday when it got up to that 16.98. But I said, I'm going to wait until it gets to 36. And then the euro, I think you ended up shortening for it a little bit. And it did rotate lower about 25 pips. We finally made it to 94.36. Now we're seeing the dollar work a little bit higher. And I'm thinking, okay, on a Friday, maybe for the liquidation. But for bulls, they haven't done wrong buying the dollar. And I said this, and I didn't mean it facetiously speaking. We're probably, they know that when you get that bid going into the U.S. session, it takes us about to the mid-U.S. session because we get some acrimonious tweets. So it makes sense. If we don't get those acrimonious tweets by mid-U.S. session, then I could probably see this dollar start to rotate. I don't think the wheels will fall off the caboose, but then at that point, because I really want to be selling any rallies back up here to 95. So if by mid-U.S. session, if we haven't gotten any acrimonious tweets, then we'll probably start to pair right back here with the cash dollar index. But that's about the only thing I got. Only thing it is very important that gold defend the 1207, which was that breakout on the daily. We showed that from the prior day before, and that got things cooking. And here's 1207 on the December futures. There's that 1207 we had. And so we said, hey, this thing will go bullish if we get that daily close. And we got that daily close, and the market was open. And we ran out of gas at 1219, and 1219 is that same area we talked about a couple of weeks back. Let's pull this back. Here's that 1219 on the market profile, and we had a real nice volume area here, and that's where the market rotated back. So they ran out of gas at 1218, but I thought this was very disappointing for the bulls here. But it's important that they close a daily close and they defend that 1207, but I still like the 1204 area, and then for this market longer term to move higher still to 1245.
Sorry, I was just tweeting out our link to the webinar. Sorry, I'm half asleep. Friday. It's Friday. So you have the bias chart all done, correct?
Yeah, there it is.
Cool. Yeah, I was trying to put it all together. I'm like, I don't even know. I'm trying to think what I traded yesterday. I closed up a lot of my trades really early. I was done, and I got whipped around a little bit and gave back some of my profits yesterday, but I still had a very positive day, and I pretty much ended up hanging up hanging up my hat by, a decent time. So, as far as, trying to remember and recall exactly what I did yesterday, and I'm not.
You sold the euro right close to the top, and then you ended up eventually covering, and I think you ended up going long the euro, which was a pretty nice move.
I did. Yeah, that's right.
Yeah, I wanted to sell the euro, but I try to maintain my discipline and wait for 94.36, and I never got it. So I was kind of boo-hooing as I watched the euro slide lower. But you covered right near the lows, and you said you're getting long, and certainly the euro did move higher.
I did. I remember that actually, because I was I was joking that a lot of the things that I need to do, just for my personal life, they get kind of pushed under the rug. Like my emissions testing for my car, it needed to be done, and I got a warning from the Department of Transportation, like, your registration is expired. And I'm like, oh, I forgot to do that last month. And so yesterday was a perfect example of, okay, I made a little bit of money. I did all right. Gave back on a couple of trades. I gave back some, and I'm like, you know what? I'm just going to go to the emissions testing, get it done, go register my car, since it's, I got nothing else to do. I thought the market could be kind of quiet, and I was sitting at the emissions testing, and I'll show you guys what I was. As I was sitting there, thank God for mobile. For mobile trading, because a couple of years ago it wasn't even possible. So we were sitting here yesterday, and this the euro dipped to 116.70, and I picked up the euro 116.71, and when I stepped back in from there, when I got back to the desk, I sold it at like 85, and that was it for the day. I was pretty much done there. So yeah, I was long the euro, sold it, bought it again, then I exited it. I didn't short it. Or maybe I did short it.
You did.
No, I did, because it came up against this trend line. That's right.
You caught it right near the top, because I was telling you, after you shorted, I said, well, our buy chart resistance is 16.98, and you got short.
And it was because of this downsloping trend line.
Yeah, you showed that in the chat room.
And I shorted. Yeah, that's right. So I did. And I played it pretty well. Now, unfortunately, at that point in time, I actually I have to think about what trade it was. I took a couple of small losses, and I was like, and I made some money in the euro short, but I took a couple of small losses. I think it was on gold, actually. Yeah, that's exactly it. Because I was long gold, and I picked up gold and silver. That's what it was. And as the euro fell, gold and silver really broke down, and I took small losses in those, made some money in the euro, and overall net after the morning, I'd lost a little bit of my gains that I got from earlier and from the ECB meeting. And I said, I'm pretty much done. And then when I was at emissions testing yesterday, I picked up the euro for a quick, like 11 or 12 pips right here. And then I was finished. I actually wrapped it up for the day. Now, as far as today goes, let's talk a little bit about, today we have the retail sales. So, retail sales, one of the traders in our chat room, he was like, I expect the retail sales to be weak. And I'm like, man, I don't know about that. The U.S. economy, whether you believe it or not, and this has been the non-believers for the last, I don't know how long, and arguments are, the jobs market. What about the, validity of the jobs market, or the not validity, the quality of the jobs markets,
Mm-hmm.
The higher paying jobs aren't here. People are working lower paying jobs, just to get by. Whatever the case is, our employment is full. Everybody's working. Everybody's working. Whether you're working the job that you want to be working or you are not, it structurally, I think the U.S. job market is actually in trouble longer term, because the quality of jobs, the quality of higher paying jobs are a lot less. Now, you wouldn't see that in the stock market, but I think as an economy, longer term, it is problematic. So, but also you have to think about human behavior. It adjusts, right? You're talking about a financial crisis that happened 10 years ago. I'm not saying that there's not going to be another financial crisis. There probably will be. I don't know what form it's going to take shape. I believe we're really long in the tooth as far as our recovery goes. And at some point here in the near future, we are going to start to, feel some sort of pressure as far as economic downside pressure. Was it today? I don't think so. Is the consumer going to show weakness today? I don't think so. I think right now, if you look around, people are generally, our economy is happy and humming. I mean, and whether you like Donald Trump or not, he's been good for the economy. He has given people hope. The job market is strong. He has, and like I said, it doesn't matter whether you like him or not. He is doing a lot of the hard labor stuff. When I say hard labor stuff, he's fighting on trade. He's, going after China. He's going after Canada and Mexico. Whether or not you believe it's a good thing or not, overall, people feel that he is doing the hard legwork right now. I actually think it may actually end up hurting us a little bit longer term, but he's doing the things that it right now is giving us the feel good, and people are willing to, hire and employ people, and consumers are spending. Everywhere I go, I live in a very consumer-rich area, and I live in a very economy-sensitive place. I live in Scottsdale, Arizona, or we're North Scottsdale, okay, and it's very consumer-driven. I can see the economy probably better than most. When the economy is good, people are out spending. There's a Bentley on every corner where I live. And I know when the economy is sucking wind, because all the Hummers get sold, all the Bentleys get sold. You see more, Honda Civics. It's funny almost, because of where I live. It's so sensitive. Like when things are good, I can see it's good. When things are bad, I can see it's bad. That, restaurants are empty. No one's spending. I mean, it doesn't matter where I go right now. People are spending money. They're out eating. They're, consuming away, buying crap all over the place. All the stores are filled. I mean, that's just, and like I said, I happen to live in a place where I can see it pretty clear. And I know when the economy is bad, and I can see it when the economy is bad, specifically where I live, and I can see when it's good. And right now, and Amir said Blake's jumping on the Trump bandwagon Kool-Aid. No, it's not. He's just said that in the chat room. And hey, Amir, and this is our chat room, by the way. If you, this is all of us. And by the way, Benedict, I know you're listening in from the Carolinas. Hope you stay dry out there. But and there's Paulie even chatting. Hey, Paulie. You're chatting and you're talking to me at the same time. But what I'm trying to say is, again, whether you agree with Trump or you don't agree with Trump, it doesn't really matter. Right now, the whole economy is drinking the Kool-Aid, right? And so to bet against the American consumer right now, I don't know if that's the right thing. We're going to eventually start to see economic data sour, but I don't know if it's today. I sure as hell know that I don't like betting against the U.S. consumer. Every time I bet against the U.S. consumer, I get my ass handed to me. Now, and here I'm going to put this back up here. We do have retail sales. Now, if you look technically, some of the things that I'm worried about right now on the euro dollar specifically is this failure here. This is a little bit concerning. If you're long the euro, you've got to be a little concerned about this. This is that trend line that I was talking about yesterday. We pushed up against it and we broke above it in European trade, and we've already rolled over. This is, and I know we only have 45 minutes left in this candle. This is what you call, here, let me grab a, this is a 4-hour chart. So just bear with me. Okay. It's an intraday chart. Can't read a whole lot into it yet, but this is what we call dark cloud cover. You see these up candles here, up candles, up candles, up candles, up candles, and then boom, a big black candle. That's called dark cloud cover. If we close here intraday, we probably are heading back towards the lows by the end of the day. It would be my best guess right now, just from a candlestick analysis perspective. The other thing that I'm a little worried about is that we failed at this trend line. I mean, this is a false breakout, squeezed out everybody. Now we're rolling over. You go over to the cable, you know, hey, we got a breakout in Asian trade. See that? Breakout in Asian trade. And what happens if we get a false breakout and we move lower? Now, if we break through 130, 60, the cable's going to get spanked. And I say that because we've had a really nice week. If you look at the cable, how we've performed this week, we've gone from, let's say roughly 129 to 130, 150. I wouldn't be surprised if we gave up another 30, 40, 50 pips from here in the cable by the end of the week. I mean, you look at the daily chart, you got the, nice little rally. Everybody's got nice and bulled up. You got a lot of traders got squeezed out of their shorts. How about if this thing rolls over? It's possible. Aussie, this is a really big rejection yesterday. Look at that big pin bar yesterday. If you guys were, by the way, trading the Aussie like I was the last couple of days, I'm going to just draw this out for you. We had a I'm going to draw with actual lines here. I'm going to use the chart. We had a really nice bull flag pattern. If you're using ForexAnalytix, you knew this. Okay. We had a bull flag pattern. Look like that. We completed it almost to the pip and then reversed yesterday because that Trump, or there was a tweet regarding China trade, not going so well, blah, blah, blah. And it reversed yesterday, right after we finished that bull flag pattern, right? I'm just giving you roughly what happened here. I mean, then you take the Aussie and then you got a little bit of a failure here. You have failure at horizontal resistance. You couldn't break through this previous support. Oh my God, what just happened? Holy cow. What just happened? The pound is ripping right now. What just happened? Sorry.
I'm looking, but I can't see anything.
German Chancellor Merkel, we want good relationship with Britain after Brexit. And
yeah, that's the headline.
That was the headline. Okay. So
this is the same headline that ran it up last week. And then Germany did a 180 and said, "Oh, we backed the ECB." So once again, just susceptible to these headlines.
Wow, I mean, just all over the map. And look at the pound slipping right back down. You know what? I am going to.
Done.
Oops. I just got out of my pound yen. I don't even want to deal with that. I actually took some money off the table. I was short the pound yen. It just came right back down. I just closed it. And I just took my profits off the table. I actually made 7 pips. What a nightmare. Damn, these stupid headlines. They run these headlines like, anyway. Probably could have ended up making more money, but I don't want to deal with those headlines. Not today, especially when I was just up 30 pips and then, just a moment ago, and then it just rips up like that. My stop is at 147. Well, was, let me make sure I don't have that on anymore.
Some more headlines coming out. U.S. Brexit Secretary says, after call with Barnier, we reiterate our willingness to devote the necessary time and energy to bring these negotiations to a successful conclusion.
Here, I'm giving you Bloomberg headlines reiterates willingness to devote necessary time and energy. What's that supposed to mean? Yeah, of course you're going to devote necessary time and energy. Merkel says progress lagging on four-nation talks with Ukraine. Okay, that's not it. Differences remain, closing in on workable solutions. Says differences in Brexit remain statement. All right. Well, you know what? Like I said, I just took 7 pips and I had 30, and my stop was at 147.20. I think it was 147, wherever it was, 147.24, and I just canceled it. So I just canceled it. I'm out of the pound yen. I'm not even dealing with it. Anyway, damn, I was hoping it would go the other direction. Damn, these headlines. It's really, trading the cable is really hard. I mean, it is sure is tough right now. It is very susceptible to those headlines. And I mean, I was literally up 30 pips, down 40 pips, then up 7 pips, and I just closed it. I mean, what a nightmare. Okay.
Like, I think that was a good exit, because these comments in line with the last few weeks, they're all being quite constructive. Sorry. So, I stand by what I've said before. I think they're going to get there eventually.
No, they are. And, let me show you the reason why I shorted the stupid thing yesterday anyway. So this is the daily chart. We stopped at the 127% extension underside of this trend line, and I'm like, I'm willing to risk above this resistance right here at 127. You can see it's 127.20. I had my stops at like 127.25 or something. I almost got stopped out just a moment ago. I mean, when it spiked up to 127 or 147, I'm sorry, 147.03. I mean, that was within about 22 pips of my stop. I mean, for what? I agree with you, Stelios. The overall news flow has been generally positive, and I have been trading the cable on the long side all week. This is actually the first time I've traded the pound yen in quite some time. I've been trading the cable on the long side all week and doing quite well with it. I made good money. I'll have to admit, but we were technically in some areas, and we actually started seeing a couple of negative UK headlines yesterday, but the pound rallied because of the weakness in the dollar, not so much the strength in the pound. And but overall, I do agree that the news stream that we're seeing is generally speaking pretty positive. But we've also seen a pretty good recovery in the cable too. So I do believe, though, and I'm going to actually put an alarm on this little line right here. If we take out this trend line, then I want to be short. Not necessarily the pound, maybe the pound, but I'll be short maybe the pound yen. But that's what I'm going to do. I'm going to wait for that to get tripped. Okay. And thanks for the comments, Stelios. The dollar Canadian hasn't done a damn thing. There's an article that was just out, which I thought was really interesting. Mexico and U.S. threaten to exclude Canada if no deal reached by October 1st. This is very interesting because if for some, and by the way, this is all happening. I'm going to ask you this, Stelios and Paulie. Are you guys here? Maybe even Steve. Who's here?
I'm here.
Okay.
I just made it here, so
okay.
I haven't heard anything.
No problem. I was just going to ask you guys a question. Do you think President Trump and Prime Minister Trudeau? Wait, is he Prime Minister?
Yes.
Okay. So Prime Minister Trudeau. Sorry, it's like getting the titles correct here, and it's Friday, and I'm really tired. And Trudeau, do you think they have a good relationship?
No, I wouldn't think so.
I think they hate each other. Actually, I think they despise each other. Matter of fact, I think if you're Trump, you're trying to get a NAFTA deal done before the midterm elections, right? I need to get my base rallied. I need to make sure that everybody knows that I'm doing some good, putting together deals. I'm a deal maker. I need to get the votes, because if I don't, the risk of me getting impeached is quite high after the midterm election. So I need to get this NAFTA deal done. If you're Trudeau, and remember, Trump has talked a lot of smack to Canada, lots, and I'm sure Trudeau sits there and goes, man, what a jerk, And if you're Trudeau, wouldn't you be thinking, okay, if I just keep stalling this NAFTA deal that needs to get done, ultimately it needs to get done, but if I stall it until after November, well, then maybe it weakens the chance of Trump, of the midterm elections going the way of the Democrats. Therefore, Trump might get impeached. Then I can basically get back at Trump for talking all the smack for the last.
I agree with you 100%, because all he does,
right?
if he does
now,
the deal,
this article
all he does is giving him a gift wrap present.
Right. And so now you've got this article comes out, Canada prepared to play deadline spoiler at NAFTA talks, and Mexico and US threaten to exclude Canada. Well, yeah, I mean, if you're Trump, you're like, look, you're going to get excluded if you don't come to the table by October 1st. So you see the pressure coming in on both sides, from both sides of the border. You got Canada going, maybe I'll just push this off until after November. And then, US going, well, look, if you don't do this now, you're going to get excluded forever. So this is the hardcore negotiating tactics that have everything to do with politics, but unfortunately affects everybody on an economic scale much greater than politics. So that's one of the reasons why I really, I don't like to talk politics. And if you guys are longtime listeners of this webinar, or back when I was doing the Morning Edge before I handed it over to Polly for all those years, I really don't like discussing politics, because honestly, I hate politics. Politics are all about egos, and unfortunately, it affects all of us that live in this egocentric world, right? It is, and so now you've got a situation where you've got two countries, probably throwing, firing spitballs back and forth at each other, but it's really affecting the people, the Canadian people and the US people, especially the exporters, the importers from both countries. And it's intensifying, and it's probably because of the egos of two leaders of two world countries, which is really a shame. But
it's basically a game of chicken that involves 500 million people,
exactly,
500 million people, and it's really sad.
It is sad, and so but this is what's happening, right? It is what it is. I mean, you've got Trump saying, thinking, hey, I got to get this deal done, and so this is how they're putting pressure on Canada. And then you got Canada saying, screw you, I'm going to make sure you get out of office. So we're not going to do a deal because of that. But really, when it boils down to it, that's probably what's at the gist of this whole thing, which is sad, isn't it? It's really sad. Oh my God, it's almost news time. Holy cow. Hold on. Sorry. We got to pay attention to retail sale. I don't even have any exposure right now, so that's why I'm not paying close attention. Hold on. Let's here we go. Where are we at? Where's my retail sales? Oh, there it is. Okay, retail sales. Here we go. Coming out, and I need to put it on the dollar yen. We'll see the instant reaction right here. Looking retail sales 0.4%. Ooh, weak. Wow. Not a huge reaction in the dollar yen. The dollar yen came down a little bit, but revisions, look at the revisions, huge revisions. Don't get too sucked into that. Look at the huge revisions. 0.9% versus 0.6% previously. Yeah, the dollar is going to whip right back up again. So interesting. All right. Well, I can honestly say, thank God I'm not trading right now. Thank God I'm not in any positions, because I'd be very frustrated. So the numbers came in a little weaker than expected, but huge revisions higher. So the dollar yen is catching a bid after originally selling off to 78. We're back at 85. You can see the euro dollar spiked up. It's coming right back down again. Pound's actually holding up pretty well because of all the comments from Chancellor Merkel. Aussie is weak. Oh my God, that's weak sauce. Look at that thing. That thing spiked up and it's almost down to new trend lows. Kiwi not really performing that well. Canadian all over the map. Swissy. All right, I'm going to pass it over to you guys. That's all I got is fart noises for you, because there's not a whole lot going on right now. Hello.
Okay. Couple weeks.
hey, there ain't a lot going on. You guys have fun with that. Talk to you guys later. TGIF.
Bye-bye, mate.
No,
Thanks,
seriously.
Blake.
Good luck, everybody. Hey, TGIF, and thank you all for being here this week. Remember, make sure you join, or make sure you look into Forest Park FX. I mean, look, if I was an independent trader, which I'm not anymore, unfortunately. Well, no.
Fortunately.
Fortunately. But if I was an independent trader, I would say, look, I trade a lot. Why am I not getting cash back rebates or getting reimbursed for my trading? Getting free ForexAnalytix if I could, or get some sort of cashback rebates. If that's something that you're interested in, talk to Forest Park FX. You can find their link right on our website. Their contact information is right at the bottom of the page. Just go there. Steve will show you how to get there, and talk to them and see what your options are. One of our traders, JT, in our chat room, he's like, hey, I just got my first check from Forest Park FX, and that's the check that he gets is, getting a rebate back from trading, because he trades enough liquidity where he can get a cashback refund. Why wouldn't you do that? I wish I would have done that and been able to. So anyway, guys, gals, I hope you have a wonderful, wonderful weekend, and I will be back. I'll be back Monday, and hopefully Dale will be back Monday too. Let's all hope he's recovering from his pneumonia. I'm going to reach out to him over the weekend. I'm going to give him a call. So I'm actually going to probably call him today. So.
Yeah, let's actually hope that he has a fast recovery.
All right.
Pneumonia is not, something to joke about. I mean, can get nasty. I'm sure he's going to be all right, though.
Yeah.
So Blake, before you go, if you can give me a fast recap of what you talked about, because I came literally at the last second.
Really, I was talking about how I traded the euro yesterday, and I'm really unsure. And I was actually looking for, possible breakdown of the euro dollar, and cable got some positive news flows just a moment ago. And, the Aussie's trading really weak. It had a failed rally attempt yesterday. Canadian not really doing anything. So really just talk the majors. I haven't talked about any of the crosses. So aside from the pound yen.
So we'll focus mostly on those. Okay, thank you.
All right. Good luck, guys.
Bye-bye. Stelio, any questions that have gathered up so we can start on them?
We only have one so far, actually. And it's our friend Niraj who's asking about the Indian rupee. And he was actually, you covered it last week, and he was actually looking for maybe if you can provide some support or resistance.
Yeah, let's start by having a look at the exotics, because I wanted to do that yesterday as well, but we had quite a lot of event risk. And then we're going to go back to, more popular pairs. We usually do it, oppositely. Now, having to do with, the USD INR, obviously a very big evening star formation, the one that we got midweek. So I would be looking lower, but let me make it clear, in the short term, right? This is a confirmed high that we had here. Just look at the RSI. But on the other hand, this is a big reversal formation. So I think this signals the beginning of a corrective move lower now. as I've said plenty of times, you can never be certain, like, how this move is going to play out. It might play like this, might be like a triangle. It might be something like more complicated, that takes a lot more time. But, we need more price action to find out. But I would be extremely surprised if we saw higher prices like imminently. I think that at the very least, the pair is going to take some time correcting or consolidating. I would be looking for this area, the previous breakout area, to act as support initially. But even if we actually break below that, I think that then the 69 area is going to be very, very tough to crack. So, a correction lower, I doubt it's going to be easy making it lower than 69. So, if you're looking to do something with it, like in the short term, I mean, within the next few days, perhaps a couple of weeks, I think selling rallies is the preferred way to go. Now, let's have a look at a few more of the exotics, and then we're going to go like to yen pairs, etc. So, USD Turkish lira. If you remember, I was quite explicit about yesterday.
No, I was going to say we've been asked the dollar Mexico as well, so maybe you
sure.
cover that anyway.
Use the Turkish lira. You remember when we were trading here near these highs, I said that I doubted that we're going to push higher from there. I would be very, very surprised, and that the reward to risk ratio, like, said that being short is not a bad idea, because you had a very well defined reward to risk ratio. So we did see this move lower. We did see a very big move, specifically yesterday after the Turkish Central Bank hiking rates to 24% still, if I'm not mistaken.
That is correct. It was expected to hike to 21 and they hiked 300 base points more.
More, yeah, to 24%. So, it's all about, there was no question. The only way that Turkey could fight this currency depreciation would be with, either a recession or a complete distraction to the economy. I wish they could have done it earlier. There's no question about it. 24% central bank rates are definitely going to, be a huge headwind to the economy. But at least, they might avoid like having like a currency rout, and they might avoid, and they say might because if they had done it earlier, the chances would have been a lot higher. Like huge problem with hyperinflation. Now, I guess we're going to find out, but regardless, I would expect that how it plays from here, either we stay in the triangle, or since they actually, did a little bit more than expected, perhaps we're going to have another leg lower before moving higher. So I wouldn't be surprised if this is what happens if we don't actually keep consolidating. Okay, so quite clear about that. Bottom line, in the short term, I'm not looking for lower Turkish lira. Definitely not looking for it to break the lows. USDs are quite an orderly pullback. I think we had pinpointed this area as a double confluence of resistances because it was the 61.8 from the last move, from the big move that we had lower, and it was also the 127% extension of this move. So, makes sense that we're seeing some kind of a pullback. I don't think it's impulsive in any way. So I think that we need to maintain a bullish bias in the medium term. Now, until we get a confirmation, obviously this correction can take some more time to unfold. So basically, the vast majority of the exotics, USD doesn't seem like it's ready to push to new highs, anytime soon. Now, this is a nice example of what happens with triangles usually. This is the USD rubble. This is what you usually expect to see from triangles, meaning that A, you expect them to break in the direction of the trend, which is exactly what happened with the USD rubble. That's what I was expecting to see, and that's what happened. But on the other hand, very, very often, this last thrust that you see higher or lower from triangles depends on what kind of a trend you have. it ends up being terminal. So we bridged through the triangle. We pushed all the way to the 50% fib of this big move lower that we had after that huge 2016 sell-off of the ruble. And we we tagged the 50% fib almost to the pip. We almost made it also to the ABC, like A equals C target, which would be a little bit above 71. And now we're pulling back. We penetrated through the previous triangle's resistance, so it didn't actually work as support. Bottom line, same deal here. I would be very, very careful being long the USD ruble. At the very least, I would expect to see a more complex correction, if not a pullback, even quite lower from here, perhaps like 64. USD CNH. There's been a lot of discussion about what's going to happen with the Chinese yuan. We know how much it can affect the markets overall. I think that this is a triangle. I mean, we have a decent amount of price action so far to say that with, not absolute certainty, obviously, but, a decent amount of certainty. I would expect that that means that I would expect the next move would be to the upside. But as I was showing with the USD ruble, I would also expect that perhaps after seeing one more push higher, we would then end up seeing a deeper correction. So I wouldn't be short the USD CNH now, but I would be looking for opportunities after we pushed to new highs. Stelio, you talked about the USD MXN. We had a question about it. You said this is exactly what we drew about the USD MXN. I haven't touched this drawing at all because I actually didn't need to. For those of you that are watching the webinar, you know that this has been here for a long time before I even left for vacation, I think. We expected that this breakout from this descending wedge is actually going to produce follow-through. I expected that, simply put, best case scenario, we would get like an ABC. That's exactly what we got. We got an ABC, almost a perfect ABC, actually. We made it to the 50% fib. We're depreciating lower. I had actually pinpointed that as one of my favorite structures being, very clean to read. So I would be extremely careful if I was long here, because I see the possibility of seeing quite a lot more weakness. So I wouldn't be surprised if we actually pushed lower, pushed below the previous low at 1840, and even below this expanding formation that you see for quite lower prices. So USD MXN, I think it's a sell on rallies than anything else. This is one of the reasons why I was also a little bit more careful with USD CAD. I remember we had this conversation here in the webinar. I was saying that, I see USD MXN as a great opportunity to sell. On the other hand, USD CAD looked to me like a good opportunity to buy. But, given the fact that those two have been very well correlated with each other, not amazingly, but, decently correlated with each other, obviously looking to sell one and buy the other, is a little bit of a dangerous proposition, perhaps playing the cross. Like buying the MXN CAD or, selling the CAD MXN, depends on how you want to see it, would be the best way to play this kind of, foreseen divergence. So, not much has changed here. I'm definitely not bearish to use the CAD yet. Why? Because we still remain above this broken trend line support. Let me zoom out so you can see this blue one. On the other hand, despite the recent sell-off, still this has a correction that completely lacks impulsive characteristics, right? So do I like the fact that the pair actually within this week sold off substantially? No, I don't. It's not that I'm long to really care, but having to do with the bullish thesis, it does matter. But do I think that, the bullish thesis is broken and it's mistaken? No, I don't. I think we need to see more price action. I think it might be a more complex correction, but I would still, if I had, if I was forced to do something with it, right here, right now, I would still be buying it. So it's that is that. I mean, not much has changed. Now, having to do with the USD NOK. Now, USD NOK pushed back down to 820. More or less, we were expecting that since we were trading here. So the question is, what happens from here? I think that 820 is going to, I mean, this level is quite critical. Anywhere between 1850, you see it's the 61.8 of the last leg higher, 820 horizontal support area. I think this is going to be the level that's going to tell us what's going to happen from here. Because if we actually do break below it, I think that we might see a lot more weakness. That wouldn't change my general thesis, though, which is this is the USD NOK from a weekly perspective. First of all, you can notice that this week's candle is, very bearish. There's no question about it. But on the other hand, no matter how bearish this candle ends up being, what remains to be true is that we've been in a very prolonged consolidation. Given the fact that we entered this consolidation after a very strong move higher, I would still believe that the possibility of this getting resolved to the upside is substantially higher than anything else. Obviously, though, if we do see more weakness, we might just end up pushing lower within this descending channel and see more choppy price action in the long term before something happens. So 820, quite important. We are seeing a reaction so far from the market here. I think that if 820 breaks, we can easily see price trade back down at 8. Let's have a look at the USD SEK as well. I was showing, I think it was the day before yesterday. Yes, early the day before yesterday, when we actually attacked the 50 DMA, I was showing in the chat room that be careful because USD SEK has currently reached a triple confluence of supports. You can see what this triple confluence of supports is. It's this ascending blue trend line support. It's this bull flags or potentially bull flags support. And you can see here the green line, that's the 50 simple daily moving average. So far, we're seeing a nice reaction. If we actually close anywhere above roughly 9005, that's going to be a morning star formation, which is like a bullish reversal. Also, so far, you can see that the correction lower has been overlapping, slow, choppy. So I would definitely not be selling USD SEK here, right? There's a good chance that we're going to see a nice reaction. There's even a good chance that we're actually going to break this channel to the upside and resume higher. So until proven otherwise, so until we actually breach through this confluence of supports and we see some momentum to the downside, I have to stick with the bullish scenario and the possibility that this is going to just resume to the upside, given the fact that the data having to do with that are overwhelming. Now, let me see if I forgot any of the exotics. Actually, I think that's it more or less. Let me go through the metals and then we can go through some of the yen pairs or crosses. So silver. Silver got rejected yesterday exactly from this descending channel's resistance. I've said it many times. I would want to see a reaction higher, and I do think that once a rebound starts unfolding, it can easily accelerate just due to people, covering their short positions. CODs are at record shorts, both for gold and silver. But so far, we haven't seen that kind of a move that could spark, a short covering movement. So, do I believe that sooner rather than later we're going to rebound higher? Absolutely. Do I believe that this has already started? No, I can't say that unless I see this, this channel breaking the upside. Okay. I maintain my gold long position. I'm, a little bit in the money. Gold has already broken above the equivalent channel, so it has that going for it in comparison to silver. But I do want to see finally some pickup in momentum. Okay, so I'm holding my position. I still believe that a push towards 1238 is quite likely. But the first step would be to see an actual daily close above 1208. That's going to make me feel a lot more comfortable. Copper, nice rebound the day before yesterday. Has that changed something? No. Why? Because we remain within this triangle. So as long as we remain within this triangle, and especially below this horizontal support resistance area at 274, let's say, you have to respect the potential for more, for a bigger sell-off. Now let's have a look at palladium, and then we can have a look at platinum. Palladium's consolidation near the highs is ongoing. As I said, this looks like a bullish consolidation. The more we trade here without seeing a deeper correction, the higher the chances that the bulls will actually manage to break through and push higher once again. So palladium looks quite nicely positioned for another run higher. And this is platinum, actually. Platinum is also making an attempt, but so far, this can just be interpreted like another pennant, bear flag, depends on how you read it. I would want to see those trend line resistances, all of them actually get taken out before I get more enthusiastic about it. But so far, we're finding resistance at the 50 DMA, at the first descending trend line resistance, at this horizontal support resistance area. So, so far nothing to see here. I mean, you have to maintain a bearish view. I would want to see probably a move above 820 to and some pickup in momentum to actually start feeling good about it. Keep in mind that platinum for a long period of time has been the most battered of the metals. Still, you remember for a huge period of time, historically speaking, platinum was trading at a premium in comparison to gold, right? And now we have the exact opposite situation. I haven't actually. I don't think I've mentioned that. I don't remember if I've mentioned that. You know that platinum is actually not used in jewelry, right? It's not white gold.
No, it's not like gold, but it is used in jewelry. Like I have a platinum wedding band, but
no, it's not.
The usage is much less than gold.
No, that's gold. What you have is gold.
Is it?
They do a special processing either for pink gold or white gold. Up until some time ago, I also thought that was actually platinum, but I found out, speaking to a guy that has a jewelry, that that's not the case. They use gold for everything, and they mix it with some pre-made like mixtures, which I don't even remember what kind of metals they have, that give either the distinctive white color or pink color. And he was adamant about it. He was quite clear. They do not use platinum at all. Stelio?
I'm here. Sorry. Yeah, no, you're right. And I have to go and have a word with my jeweler then. Because he was holding me as being platinum. No? Anyway, okay. Interesting.
Yeah. Let me mention one more thing. I was saying yesterday specifically that 111.50 has been acting as resistance multiple times, but I really see this as a pair that wants to break higher. We've already seen this move in the USD yen. I tend to trust it. I mean, my feeling was telling me that USD yen is actually finally going to break to the upside. We are seeing this move. I don't see any real reason why it's not going to make it at least back towards this high, like 113.20. So I think that, first of all, I wouldn't be trading it because, as I said, it's choppy like hell. I mean, it's a nightmare. But I think there's a clear bias, at least in the short term, and that's higher. So that is that. Now, having to do with the DXY, quite an important move lower here. I mean, we broke below this ascending trend line support, and I do believe that we should see more dollar weakness in general. So I would expect that the DXY, I don't know now if it's first going to extend some kind of a corrective move. I mean, it might behave in various different ways, but even if it doesn't break down now, I would expect that there is at least one more leg lower before considering seeing some strength again in this market. So personally speaking, and I know that a lot of the currencies we've been monitoring look like they're weak against the dollar today. So for example, earlier today, the cable, the euro were pushing higher, and now they're actually negative on the day. But that doesn't change my thesis that much. So, I would still expect them to do well for at least a short period of time to follow. So next week, for example. Now, we were talking about the USD Swiss. USD Swiss is testing the 96.50 area once again. I think it's actually going to break it, very shortly. I would expect to see one more low before anything else. Stelio, we had your friend.
I was about to say, sorry?
Yeah.
Have a look at that. And also, before we wrap up, can we also have a look at oil? Our friend Mohammed is asking, and
absolutely,
it's probably a nice one. Thank you for looking. Thank you.
Shanghai Composite. Listen, first of all, I don't like this structure having to do with being bullish, because this looked like a very, very corrective move. The fact that we broke lower makes 100% sense, because just compare how little time it took to sell off from there to the lows, and then it took like double that time to retrace, not even 50%. So whenever you see something like that, you expect that there is more downside, or if the trend was opposite, like more upside. And this is exactly what we got. Now, there is only one bullish interpretation here, which is not unlikely at all, at least in the short to medium term, and it's the following. First of all, let me zoom out. As you see, we're testing a zone that has acted as support resistance, quite a few times. Second of all, there is a decent chance that this is a descending wedge. Now, is it certain? No, it's not, because, perhaps, this is a flat bottom triangle, because it depends on if you want to take this low into account or whatever. But one thing is for sure, you don't want to see the index really break below like 2,600, because then I think it's, it might even accelerate to the downside. Now, on the other hand, if we do see a move above, let's say, 2730, I think that there is a decent chance to see like quite a nice recovery. So I would be closely monitoring this. It might actually produce a very nice rebound. But as I said, you have to respect, that we are in a bearish trend. So, don't let this run against you. I mean, you want to be long. I see why. But, then don't just, if it actually starts breaking down, don't just go with praying and hoping that it's going to reverse from lower, because I think that if we make it through this zone, it's not going to reverse for some time following that. So, that's what I think about the Shanghai Composite Index. And let's have a look at crude.
Thanks for that, Steve. Maybe crude as well, and we wrap it up.
Absolutely. Now, crude, one more rejection from the exact same. I mean, look at the manner that we got rejected, the exact same one. I mean, we were looking like we're finally going to break above 70, and I mean, close above 70 on the daily. We didn't. We reversed once again. What followed was quite a bearish day. So, as long as we don't clear this $70 resistance area on a daily closing basis, I think that it's a coin toss, because there is the potential that this move higher is a corrective move of the first leg lower, which is a bigger correction. So let me be clear. In the medium to long term, I'm looking for higher prices. Now the question is the correction from the 75 level over or not? I think that, seeing a daily close above 70 is going to be a very good indicator about that. So far, we haven't seen that. So, despite being bullish in the medium to long term, I have to leave open the possibility that there is more downside before that happens. So, I need more price action to tell, but I wouldn't be buying, after getting rejected once again from here, right? So I actually think that from a reward to risk perspective, being short here, knowing exactly where your stop loss is, like above 71.30, would make more sense if I wanted to do something in the short term. But I'd rather wait more. I would rather wait more. I made money being short on the previous leg. I don't want to chase this one because it's likely going to be the last leg lower before seeing like a bigger move to the upside. So what I would ideally want to see is hopefully see another move to the downside, and then see momentum stalling and some nice reversal. Then I would be more than willing to participate, this time being long crude. So that's my general plan about it. So thank you all for being with us for this week. We had quite a lot of an event risk. As always, we will be sending out updates, alerts, and we're going to be in the chat room. And have a lovely weekend, and we'll see you again on Monday. Thank you very much, Blake and Stelio and Paulie.
Thank you, Steve. Thank you very much.